Take back control of your money by becoming your own bank or your own banker. This is something I say all the time. I probably say this at least 20 to 30 times a day, whether it's in shows or it's on phone calls, helping meet someone where they're at financially today and helping them explore the infinite banking concept. So what is the infinite banking concept? The infinite banking concept is about taking back control of your money, taking back control of your finances by acting like the bank, taking on the bank's functions. As R. Nelson Nash taught us, it is the process of taking back control of the banking function in your life. So when we talk about this, the first thing that we always think about is what? It's the specially engineered whole life. We associate one with the other. They are not separate. Infinite banking, oh yeah, that's with that specially engineered whole life. Well, what happens if we remove the whole life? Is that possible? Well, yes, it's possible. Actually, it's more than possible. And I'll mathematically walk you through a few examples today. Remember, IBC is about changing one thing. Where does your surplus money go first? Again, Jason Sipple here with Founding Fathers. Every week, I'm here to inspire you, to educate you on your financial freedom journey. This is your journey. I'm here to support. Let's dive in. So when we talk about the infinite banking process, what is that? And it's not about the product. It's not about the whole life. It's just a process of how you manage your money, a process that follows God's natural law. What's God's natural law? It is the law of motion. An object in motion has to what? Put in the chat. It has to, that's right, stay in motion. And why is this important? It's important because someone, unless we're going and living off the land and we're not trading or purchasing or anything, or living in a society where we're trading values and goods and the things, it is taking back and being in charge of the banking function in your life. And some of you that are watching this, some of you that are listening are thinking right now, wait a minute, Jason, just wait a second. I'm in charge of my money. I'm not giving up control of any of my money. I pay for cash with things. My money is mine. And I would say, okay, when you get paid, where does your money go first? Your money goes to the bank. And if you take your money, if you take your hard-earned money and you give it to that teller, you make that deposit, or it's automatically deposited for you, which is what most people have with their jobs or with their contracting work or with however you earn money. Does that teller, does that bank take your money and lock it into a little safe deposit box and write your name on it, and it's just yours? They just wait till Frank or Brenda or Brad or Jason or Anthony, Linus or Lynn or Connor come into the bank and say, hey, I want to take my money out. No, that's not what happens. The banks, as soon as you make that deposit, they have to move your money because they have to follow the natural laws. So they loan the money out. And now, are they paying you much of an interest rate? Sometimes. Sometimes maybe they're paying you 0.07%. Maybe they're paying you nothing if it's a checking account. Maybe you have a high yield savings where they're paying you more, right? Give a little bit of, what's that called? Foreshadowing of what we're going to talk about. So maybe they're paying you a little bit of interest, but are they charging more for that home mortgage, for the car, for credit cards? Yes. And what happens? The banks are making money on the money that's being lent out. And whose money was it? Let's go all the way back to the beginning of my story. Whose money is that? Whose money is that? You guys answer this in the chat. Whose money is the bank using to lend to other people? It's your money. And what did you do for that money? I bet you worked hard at something. You took your resources, your most precious resource, your time, your energy, your focus, which Thank you for giving that to me today. But you took that energy and you put it out to work. You earn money. You got paid for your time. And some of you might say, hey, I'm worth $20 an hour because that's what I'm paid hourly. And I would say, that's where we get a little confused sometimes. We are worth what we can create. We are worth what the level of the problem is that we are solving in the world. And that's not really our worth, but that's what someone's paying us. So we're taking that precious resource and we're giving to the bank. They're paying us a little bit, they're making a lot. We talk about this, they're making a $400 to $1,500 spread on every dollar we deposit. So when they're doing that, what's happening? They're earning interest. They're earning that spread on the money that you made. So when we're trading our precious resource, our time for money, and then we're giving up control of that money, what would it look like if we took back that control? If we rose up and said, hey, I'm going to take control of this, I'm going to learn this because this is worth learning. The infinite banking concept as taught by R. Nelson Nash is nothing more than controlling the financing in your life. This is beyond a product. This is beyond anything else because it's a concept. And when we're changing where our money goes first, let's talk about how this would work with our whole life. Let's take a look. Like, how many people here, and give me a show of hands, are making or have a monthly car payment? I bet you to most of the people watching this, maybe not everyone attending today, but most of you have a car payment. And when you have that car payment, what are you doing? Who are you paying that monthly to? You're paying that monthly to someone else, not to your family, not to the Sipples, not to the Knowles, not to, the Beckhams. You're paying that to somebody else. And every debt we have, every payment we make on a loan has two parts. Two parts. And I want to keep this as simple as possible today. Think about the two parts. The two parts are what? Put it in the chat if you know. The two parts of every payment are the principal and the interest. And who are we paying interest to right now? The banks. Remember, we're either making interest or we are paying interest. And this process that I'm sharing with you is just about the movement. And we're going to think over, you're going to hear me say this over and over again. It is the flow of money. It is the circle of money. And it's also the pain of discipline. It is also practicing this process and not getting in to the point where you forget that if you don't use this, if you don't practice this, then you lose it, which is something else that Nelson teaches us. And this process is where the magic is. So let's look at some other ways other than, I know it's shocking, there are other ways you can do this without the specially engineered whole life. And let's look at what some of those other ways are. I'm just going to share 3 today. So stay tuned. I'm going to go one at a time. And I'm going to go through this with all of you. So let's start with our savings, right? Let's imagine that our money is over here. Now I was going to use the board behind me, but I'm going to just stick to my hand. So follow me here. Over here is our savings. This is where our surplus money is being stored. Now, if it's like my checking account, I'm not making anything on that account, right? But what if you have a high yield savings account and you're paying yourself every month consistently? Your money goes here. Now let's take the example of the car loan. So now over time, you're building up the capital, you're capitalizing your system, this high yield savings. Maybe you're making 3.5%, 4.5%. I've even heard some like 4.79. You're using this. And now when you saved up enough to pay off the debt, the money goes around the circle to the other side and you pay off the debt. Now, instead of writing that check to that bank, to Ford or Hyundai or wherever that was going, Chase, wherever that check was going, you're going to write that check back to yourself. You're going to change where the check goes and you're going to get what back? The principal and the interest. And that's going to flow around the bottom of the circle and back into your account. And when you recapture this, we show this that you are actually recapturing that percentage of interest which is going to increase your savings, which is going to increase your cash flow. This is a cash flow game, folks. This is the interest that you were paying to someone else is coming back to your wheel of wealth. It goes around the circle and comes back. But what happens when you take that money out to pay off that car or that debt for your credit card or the line of credit or whatever it was that you paid off, and you took back control of that? What happens to the money that was in that account? Is that still growing uninterrupted and compounding interest? No, you disrupt the compounding interest. You disrupt the interest that it was earning. And then as you pay yourself back, you're filling that back up. But we're still practicing the flow of money. It's going around the circle. It's going around the circle. We're taking the money from here, we were saving it. This is where our surplus money goes. We're moving it to here and taking back control. Instead of paying somebody else off to the left, now we're paying ourselves back, our family back. The money's staying with us and it flows back to here. And now we build it back up again and we put it to use again. Think of a game that you all played when you were kids. Show of hands here. Who loves Monopoly? I know Connor's on here. He loves Monopoly, right? These are some of the other things that we can recognize with our debts. We have to be honest. I heard a great example of a guy talking about fitness the other day. I'm going to depart for a second, but talking about fitness and saying, listen, if you've been going to the same gym for the last 10 years, it's not working. If you're still embarrassed to take off your shirt, but you've been going to the same gym with the same training group and the same schedule, and you're eating the same thing, and when you look at yourself in the mirror and you're unhappy with it, what is that? That's your ego telling you, like, hey, it's going to work out. I just don't want to do the work. But when we really are telling ourselves the truth, when we can look ourselves in the mirror, when we can look ourselves right in the eyes and say, listen, I want more. I want to be better for myself, for God, for my family, for everyone. I know there's more. So some of our debts that we're recognizing, that we have to be honest and look at where the money's going, are credit card debts. Right now, credit card debts are averaging about 23%. And I talk to a lot of people that are paying 28, 29% on those cards. Student loans, personal loans, potential, tax money that you're paying out to Uncle Sam, other different things that your car payments. You are giving up interest about 35 cents of every dollar. So let's look at this. Remember, we're talking about the flow of money, and what are the two parts of a debt? It's principal and interest. I'm going to sound like a broken record, but I really want to keep reiterating this because it is the repetition, hearing something, practicing it over and over again, that is like Monopoly. Think about Monopoly. What happens? Who here? I like being the car. Maybe you like being the hat, the thimble, the war boat. I don't know. What's your favorite piece? I'm just curious. But I like being either the dog or the car. Like, there's always been my two favorite things, depending on who I'm playing with. Linus picks the car too. So we're going to pick that car. It's a sweet ride. And we're going to go around. We'll get some money to start with. We're all equal at the beginning, right? We're all equal. We're going to go around the board. We're going to try to stay out of jail. We don't want to go to jail unless maybe someone has all the places with hotels, and maybe strategically in Monopoly, it's okay to go to jail once in a while. But what happens? We're going to go around the board. We're going to decide, do we want to make investments to get return, or we're going to pass go eventually, and we're going to get more money. And as we get more money, what are we going to do with that money? We're going to take it and we're going to invest it. And we're going to just keep doing the same thing. And the more times we go around the board, the more money we have, the more opportunities that come to us. And this is what we're doing when we're looking at the different ways to keep money flowing around the board. So just think about your life, think about your cash flow as a Monopoly game, because that's really what was training us. So I got a cute little Scotty dog from Lynn Rose as her favorite. I love that. And that money from that savings, right, that you're getting every time you pass go, or every time that someone pays you for one of the properties, you're recapturing the money. You're taking back control of the money. And then you have to decide, are you going to keep that money in motion, or are you going to be the person that goes around the board and just collects cash and cash and cash? And eventually what happens? Something big comes up, someone owns and puts a bunch of houses and hotels, and now you have no money. getting off track talking about Monopoly, but the whole point is that we're going to start with our savings. We're going to reinvest and we're going to grow. And we're going to make sure that just like paying off, the properties in Monopoly, we're going to pay off our debts. We're going to make sure that we're going to get rid of any financial obligations to somebody else. We want to keep that money in our family. And another point is, as I was thinking through this, I was thinking, well, this is like building wealth, like actually building wealth, not appearing wealthy. It's not I made extra money, I had money come in. My amazing wife, partner, best friend, she has some extra money at the moment and she's excited about it. And I came home after a long weekend out of town, father-son weekend, and I came home and I was like, hey, what did you buy with your money? And she's like, you know what? Nothing. Because I have the IBC mindset now. I was so excited. I wasn't going to share this today, but it is about delayed gratification. It's not about getting money and having a little bit of extra money that you've recaptured in principal and interest and going out and getting yourself a Gucci belt or something fancy, a Rolex, something that makes you look the part of being wealthy. But actually, all have you done is Parkinson's law, and your income rose and now your expenses rise to meet it. We don't want to build wealth for appearance. We want to build wealth for what? What is it that we all want? We want freedom. We want to be back in control. Linus is on it. He knows. We want to be back in control. I must say that a lot. I must say we want freedom. 2,500 plus conversations in infinite banking. Every single person wanted freedom, control, or some combination of both of them. It all looks different for all of us. Some of us want to be sitting on a beach. Some of us want to be creating massive impact. Some of us just want enough that we can build a garden in our backyard and start living off the food that we harvest ourselves. There's just different variations, but it all comes back to the two things. It's not about looking wealthy, acting wealthy, going to all the fancy things. We just want that security, that freedom feeling. And so let's look, if we're going to keep looking at what else can we use? So we used a high yield savings account and that worked. We showed how that would work for infinite banking. What if we used a 401k, right? What if we were putting money, we're locking up money, we have our silent partner, the government, but it's building over time. And let's say that with a 401k, we can either borrow $50,000 or 50%, whichever is greater. And we can go and if we have a debt or we're making a major purchase like a investment or buying a new vehicle, or maybe we're going on a really cool vacation, we're taking out a loan from the 401k, we're moving it around the circle again, right? We're recapturing that interest and principal. Now we're paying the 401k back with interest. Where does that interest go? Where does the interest go that we're paying back? To the 401k. It goes back to us. Why? It goes back to us. A lot of people don't know that, but when you're paying back your 401k at 6%, 7, 8%, it's actually going back to make that account whole, to catch that account up. So that interest goes back to us. So now we're making money, not only on the 401k side, because we're paying back the interest to ourselves and making that whole, and it's growing again. Hopefully, the other side of the wheel, we've also made money because now we've recaptured this expense, this principal and interest, and we're paying this back to ourselves as well. So now I got both hands up. We went around the circle again, like the Monopoly board, and we've made money in both hands. In both hands. We're making money twice, okay? What's something else we can look at? It's up there on the board. A HELOC, right? How many of you own your home, your condo, your property, and you have equity in it? And you're going out with your friend, you're like, yeah, I'm pumped up. The market's up. I'm making a lot of money here. I have a lot of equity in my home, and you're just talking about it. You're just talking about the equity. Well, what's it doing for you if it's in your rafters, if it's locked up? Not a whole lot. Not a whole lot, but what if you access that money? What if you access the money, and if you're a disciplined person, if you're someone that has a good debt to income ratio and you're practicing good financial discipline, you access the money. You go in and you pull the money out of your rafters, right? Out of the bricks and mortar. And now you have your HELOC on this side and you're paying that interest. Goes where? It goes back to the bank. But now you've taken this money that was locked up. It wasn't usable before, but now you've accessed it. Whether it's, 20, 50, 100, $200,000. And now you're going and you're finding something, either a debt you're paying off that you can recapture and recycle. The what? The two parts, the principal and the interest, back around the bottom of the circle, back to this hand, or you're making an investment at this point. Now, if you've already paid off all your debts, and that money goes where? It goes back into the HELOC, because that reduces the interest rate with the velocity of money. But are you guys following me? So far, we have talked for almost a half hour, and we have not talked at all about infinite banking with specially engineered whole life, other than saying it's a process of keeping our money in motion, of having discipline, of delaying gratification. Because why? We want freedom. We don't want to look wealthy. We want to actually be wealthy, feel wealthy, have freedom, and what? Control. We want control. And we're making money in both hands in that instance too. So in all three examples, we're making money in both hands. Now, when we're looking at that, why is it that R. Nelson Nash, an Austrian economist, taught that infinite banking was superior using whole life, and specifically using a mutually owned dividend paying whole life? Why did he say that? Why was it taught that way? There's a lot of reasons. But remember, if we're talking about control, and we're talking about a guaranteed environment where we know what's happening. If we're talking about a perpetual tailwind of helping us move forward, let's look at some of the reasons why the most optimal. It's never right or wrong. We don't need whole life to practice the process of infinite banking. We're just moving the money around in a circle from this hand to this hand and back around to this hand. And it goes around and around. But to make it the most optimal, why is everyone that multiplies your money with the money multiplier teaching you that it's from a mutually owned dividend paying whole life? Why does everyone on our team, including myself, have policies that we're using for the financing needs of our family's life? Well, number one, you've got the guaranteed contractual rate. That's the first guarantee of every single contract that you become the owner in. You become the person that owns the contract. And then if that company continues to be profitable, what happens? We also get a dividend. So now we've got a guaranteed interest rate that's paid to you on an annual basis, and you're earning a dividend. And then how is that money growing? You've already paid the taxes when they were at historical low rates today. So tomorrow the money's growing tax-free. There's no Uncle Sam waltzing in and being like, yo, Jason, yo, Linus, yo, Lynn, hey, what about me, your silent partner? You got to pay up the tax man now, right? No, your money's growing tax-free, uninterrupted, and it's growing. The distribution and the loans are all tax-free as well. It's protected versus a bank account. It's protected against liens and judgment. It's liquid. What's liquid mean, Jason? It's accessible. It's growing in a stable environment in mutually owned companies. The ones we partner with, all 5 of them have been profitable from 100 to 137, 148, 160 years. That's a long time to be profitable. Think of everything that's happened in all of those years, whether it's wars, whether it's pandemics, whether it's depressions. Just think of all the craziness, and it's always been profitable. Always. Every single one of the organizations that we partner with to help you set this up. And best of all is the money is used 2 places at once. As Jonah and Jeremiah, the banking bros, say, you have it growing in this hand, saving, uninterrupted, compounding interest while you're spending here. It is the save and spend method. And finally, those are the living benefits. Finally, there's a guaranteed tax-free estate. This is what the Rockefellers have been doing. This is how you create estates and you think long term and you take care of your kids and your grandkids and your grandkids' grandkids. This is how you have perpetual wealth, a perpetual tailwind. So today we went through all the different ways that you can practice infinite banking without specially engineered whole life. But at the end of the day, the most optimal, the top choice is going to be specially engineered whole life from a mutually owned company. It's the process. It is moving. So what do we learn today? We learn that it's about the movement of money. It's not about having a glorified savings account. It's moving the money from here to somewhere where there is principal and interest being earned off your dollar and taking back control of it back to your family. It is using it to make all the purchases in your family, and it is used to make your investments. It's the and asset. I get asked all the time by investors. I had a guy come into $5 million and he's like, Jason, I don't need this anymore. I said, cool. Why not? Well, I don't need it. I'm going to live off the interest of the $5 million. I said, that's brilliant. That is such a good idea. And I just want to know, like, when you learned about this, who's doing this? Who is the one has taught us how to do this other than R. Nelson Nash? It's the wealthiest families in America. The Rockefellers, the Rothschilds, Morgan Stanleys, there'd be no Disney World if it wasn't for this amazing vehicle. And he came back. I said, it's either, if you're an investor, it's this or that, this or that, this or that. And I said, wouldn't you rather have an and? Isn't life better when you can have your cake and you eat it too? And he said, you know what? I'm going to think about it. He came back and said, that's right. This is what the wealthiest family is doing. This is why I called you in the first place. I didn't expect this big influx of cash. Let's do this where I am moving my money. I am using this for my investments. This is what the wealthiest families have done. This is what I want to do. How about you? What do you want to do with that money? Again, I appreciate you guys for being here today. I appreciate the energy in the chat. Thank you for continuing to bring the energy, to show up here, to have fun with me every week. It's an honor and a privilege to be able to share this information with you. Go ahead, pop any questions you have in the chat or down below. Give feedback. I always like to see feedback. What would you like to know about next time? What other things can I share with you? I have ideas, but I want to hear from you. Tell me, what are the things that keep you up at night? What are the things that you worry about? What are the things that you want to know about infinite banking? I'm so far down the rabbit hole, I can't even see the light anymore and know anything different than this. But what are some of the things that are out there for all of you? And if you want to, if you've been around the campfire, if you're wanting to say, hey, Jason, I want to take back control, then set up a call with me. Set up a free strategy session to learn more. We got Anthony Noel. How old do you have to be to start? Well, you can start a policy on your kids. You can start a policy on your grandkids. But someone like in that scenario, kids policies would be a whole nother trading, AM. Thank you for the question. But you have to be an adult. You have to be independent, earning money, and insurable. You have to be an insurable interest. So anywhere from 18 to 70 plus years old, this can work for you. This can work for you as long as you can pass all of the underwriting, all of the health requirements, all of the different things to be an owner in one of these mutually owned dividend paying whole life companies. And I always tell everyone I speak with, these companies ain't willy-nilly. They're not just saying, hey, yeah, anybody who wants to put money into this, I'll be your partner. They're going to make sure that they have the right partnerships. And why do we love that? Because we all want to do business with people who are making awesome choices and doing their best and adding value. See, what states are the protected liens and not enforced? Frank, that's a great question. All 50 states are protected in some form or fashion. I know where you live. I know where James lives. That is not one of the states that are protected in full, but there is more protection than there is with the banks. There's 36 or 37 states. There's a list out there. I don't have them all memorized. I know Florida is protected, but as I pray with my son that we live in the best, I call it the best country in the world, Florida. That's just my little joke with him. So Frank said 46. I believe it's 36. So So now you see that banking and taking back control of the banking process is nothing more than playing a game of Monopoly. We're just moving the money from here where we're storing it over to wherever we have taken on a loan, which has two parts, right? It has the premium and the interest, and we're recapturing that back to this side, back to ourselves. And this is how we take back control of the banking function in our life. We showed how you can do it with a high yield savings account, with a HELOC, and even a 401k. Now, R. Nelson Nash taught us that the most optimal way is always using specially engineered, dividend-paying whole life from a mutually owned company. Because why? It puts you in control, and the interest is growing uninterrupted, compounding forever, for your entire life. For all you literal people out there thinking, forever, Jason, I don't live forever. Yes, I know that. For your whole entire life. So if you've enjoyed this, if you're new here, go ahead and subscribe, smash the like button, and ring the bell, because you'll be alerted to new content. For the next video, watch right here for Become Your Own Bank. How to become your own bank. How to BYOB. Right here, and I'll see you in the next video. Thanks for being here. Share this message with anyone who needs to know how to take back control of their money, and let's spread this word. Blessed you're all here. See you in the next video.